You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Today, let's talk about some recent trading updates from two very different companies, Entain and PageGroup, which show just how varied performance can be, even within the same quarter. Starting with Entain, the owner of Ladbrokes and Coral, the news is largely positive. The company reported a 6% rise in net gaming revenue for the third quarter, with online activity seeing a strong 15% increase. Their UK and Ireland operations contributed an 8% growth in net gaming revenue, while the retail estate grew more modestly by 2%, supported by better performance in both sports betting and gaming. A major highlight comes from Entain's US joint venture, BetMGM, which recorded a 23% revenue increase, reaching $667 million. This has led the company to raise its guidance, expecting net revenue of at least $2.75 billion and earnings of around $200 million for the year. Notably, at least $200 million is anticipated to be returned to Entain and its partner MGM Resorts in 2025. The chief executive, Stella David, emphasized that this demonstrates the ongoing transformation and growth across Entain's diverse brand portfolio, which includes BetMGM, Ladbrokes, Coral, Gala, and Foxy Bingo. However, David also addressed looming challenges, particularly the potential rise in UK gambling taxes, signaled by Chancellor Rachel Reeves. She warned that higher taxes could drive players to the black market, while retail betting shops might become unprofitable, affecting high street presence and the contribution to the racing levy. Entain has suggested that mitigations could include adjustments to marketing, bonusing, and sponsorships if tax increases materialize. In contrast, PageGroup, a recruitment services company, reported a more muted quarter. The company faced challenges in a subdued labor market, particularly across Europe, the Middle East, and Africa, where revenue dropped 10.2%. France and Germany were hit hardest, declining 16% and 11% respectively, while the UK also saw a 14.3% decrease in gross profit. There were small gains in the Americas and Asia, but they were not enough to offset the overall decline. Overall, gross profit fell 6.7% to £187.8 million. PageGroup plans to implement a cost reduction program to save £15 million annually, while maintaining full-year guidance for operating profit of £21.5 million. Analysts note that despite a generous dividend yield of 7.3%, the payout is barely covered, making it unsustainable in the current environment. Over the past year, the shares have declined 36%, reflecting the ongoing pressure in the sector, and investor sentiment remains cautious. So while Entain is riding the wave of online growth and international expansion, PageGroup is navigating headwinds in recruitment markets, showing just how different fortunes can be, even within the same reporting period. The takeaway is clear. Sector dynamics and regional performance continue to shape investor expectations, and both companies are responding with strategies tailored to their unique challenges and opportunities. Stay subscribed for more videos.